Why do some investors chase high yields while others play it safe with low yields? Let's explore the reasons behind these choices. Welcome to the channel. Every day I explore personal finance questions that real people are asking on Stack Exchange and highlight the top answers from the community as well as any key takeaways. If you're new here, consider subscribing for daily videos just like this one. All right, let's take a look at today's question. Today we're exploring a common question. What's the difference in safety between high and low yield stocks? Here's the original question as it was posted to Stack Exchange. I'm going to scroll through it quickly so you can see the whole question, but feel free to pause the video if you want more time to read it. Don't worry. After this, I'll walk you through the key points of the question so you get the big picture. So, in summary, someone's trying to figure out if investing in stocks with higher yields means they're safer. They notice that utility and bank stocks usually have higher yields and seem more stable than the rest of the market, but they also realize there are exceptions, like when high yields aren't backed by strong earnings, which could mean more risk. Now they're questioning their belief about yield and safety, especially since a friend has a different opinion. Here's the top-rated answer from the community on Stack Exchange. I'll scroll through it quickly so you can see the full answer. Feel free to pause the video if you want more time to read it. Don't worry, I'll highlight the key points of this answer in just a few moments. In this answer, it's suggested that higher dividend stocks might pay more due to a company's limited growth potential or uncertain future. Knowing a company's prospects is vital, as high dividends can signal risk, leading shareholders to favor immediate profits over long-term growth. Now, before we jump into the next part, if this video has been helpful so far, be sure to tap the like button and subscribe to the channel. We post new personal finance videos every day to help you make smarter money moves. Here's another answer that was shared in the Stack Exchange thread. Like before, I'm going to scroll through it quickly, so feel free to pause the video if you want to read it yourself. Otherwise, I'll highlight the main points of this answer in just a few seconds. One response points out that higher dividend stocks aren't necessarily safer, as their value drops by the dividend amount when paid. While high dividends might mean a company has extra cash, they don't ensure long-term safety, especially since market changes can affect these companies. Here's one last answer from original post on Stack Exchange. I'll quickly scroll through the answer so you can read it. Feel free to pause the video if you need more time. And just like before, I'll be highlighting the main points of this answer for you in just a few seconds. One response points out that dividend yield alone doesn't reveal a stock's overall value or safety. A high yield might suggest the stock is either undervalued or simply offers higher dividends. The effects of a high dividend yield can be either positive or negative, depending on various factors. Here's our take. Just because a dividend yield is high doesn't mean it's safe. It's crucial to see if a company's earnings can cover its dividends without pushing its finances to the edge. Look beyond the yield and examine the company's financial health and growth potential. High dividends might mean the company is mature with limited growth avenues. Watch for dividend cuts, as they could spell trouble. Diversifying with both high and low yield stocks can help manage risk and balance your portfolio. So here's what we've learned. High dividend yields aren't a safety guarantee. It's crucial to check if a company's earnings can support those dividends. Look at the company's overall financial health and growth potential, not just the yield. Sometimes, high dividends mean fewer growth opportunities. To balance income and growth, diversify with both high and low yield stocks. Thanks for watching. Before you go, did you learn something new from this video? If so, be sure to drop a like on the video to let us know.